What's up everybody? Welcome back to the channel. I'm Shawn, GILL CPA with Neutron Tax. Today we're going to talk about the 7 things you need to do before the year is over to lower your next tax bill. Don't mess this up. Let's go to the desk. So something I tell all my tax clients is you want to be very, very proactive when it comes to trying to save money on your taxes. The most powerful tax strategies cannot be applied retroactively, meaning that if it's the month before the tax deadline, you can't implement these strategies and lower your taxes for the last tax year. Okay, so if it's April 10th, 2023, you can't do these things to lower your taxes for 2022. You have to get them done before year end in the tax year. For most people, the tax year is the calendar year, so year end is December 31st of that year, okay? So all the best strategies work this way. They're not retroactive. You can't go and backdate them to work for the whole year. You gotta knock them out now, which is why I have this list and we're gonna go through these right now. Before I get into the really good ones, I'm gonna knock out the easy honorable mentions. The first one is contributing to your IRA. Everybody knows about this one. You actually have until your tax deadline to do this, so you could wait until April 15th, 2023. But if you know you're gonna do it and you have the same amount of deduction every year, which is about $6,000 for the average person, you can just knock that out before year end. Or you can wait until the tax deadline, but I figured I'd throw this in there just so you don't forget. Next is HSAs. This you also have until the tax deadline the year after to use, but your high deductible health insurance plan has to be set up during the tax year that you're trying to apply the strategy for. So you have to get this done ideally before December of the tax year. If you want to learn more about HSAs, I have a video in the cards you can watch right now that'll go fully in depth on those and how that's an easy way to save a couple $1,000s on taxes that almost anybody at any income level can use. Okay, so the first one is using the S election. This means setting up an S Corp. This is a very powerful entity structure for most people to easily save 15.3% of their income on self-employment taxes. Now, you can't retroactively do an S election except unless it's under some very, very specific circumstances, and even then, that still has to be within the tax year, okay? So the typical deadline for the S Corp election, the S election, is March 15th of the tax year. So you can't do this next year and apply it back to this year. Knock that out before the tax year is over so you can get those savings, okay? This is a great deduction, or a great way to open the door up for more deductions. Which brings me to my next strategy, which is make sure you run payroll for your S Corp, okay? I had a client last year, a new client, who had an S Corp, didn't know he had to run payroll, he didn't know he had to W-2 himself, and this stopped him from taking other deductions that then, I think he left about $56,000 on the table. Okay, that's easy money. He could have taken these other strategies we have and used them to save $56,000 on his tax return, but he didn't know about the payroll, so he didn't run anything, and then by the time he started to think about it, it was already December or January of the next year. So you can't run W-2 payroll retroactively. So if you have an S Corp, make sure you at least run one payroll cycle, put yourself on W-2 income, and that'll open you up to my next strategy, which is the self-employed 401k. So if you have a 401k that you run for yourself through your S Corp, you have to make the contribution, your personal contribution that is shown on your W-2 before year end, okay, before December 31st. Now your S Corp will also make a matching contribution, but the S Corp has until that return is filed the next year. So until your S Corp due date, which is March 15th of the next year, unless you extend, then it's September 15th. That one you can kind of put off, but the individual side, the side that you do for yourself, that'll show on your 40 or your W-2, you have to do that before the year is over, otherwise no deduction. And that's, for the average person, that's around $19,500 to $20,500 in deductions. So you definitely want to make sure you get that done before the year is over. Now let's talk about depreciation. If you have business vehicles or business equipment that you're planning to buy and depreciate for your company, you need to do that before year end. Can't do this retroactively. This means buying a car for the company, that new printer you may need. You got to get new desks, new monitors, screens, iPads, whatever it is. Get that done before year end. This is on a cash basis. So when the cash leaves your account, has to be in the tax year that you're taking this deduction. For my real estate guys, this also applies to cost segregation studies. Don't leave hundreds of thousands, if not millions of dollars of depreciation on the table by going slow with your cost segregation studies. I know it could take a while, right? Lots of emails, finding the vendors. Get that done though before year end. Otherwise, you're gonna have to push that deduction off until your next tax return a year later. And as real estate people, we all know depreciation is the most lucrative deduction. Don't mess this one up. Next, we have stock and crypto tax loss harvesting. So if you've made money this year on your stocks, on your crypto, you had a couple winners that you sold and you had a recognized gain for, and then you have some kind of losers, some stocks or crypto coins, different things, NFTs, whatever it may be, that are running at a loss that you're kind of planning to get rid of anyway, sell those before the year is over, and you can net those losses with your gains and lower your total capital gain and save a ton of money on your taxes. Okay? If you're planning to get rid of them anyway, why hold on to them for longer and push them off to another tax year? Unless you're planning to have more capital gains in the next tax year, pull that into this year by selling them before year end, and you will have a major tax savings with that. Next one, this is a more simple one, charitable giving. If you want to donate money to 501(c)(3)s and write it off on your taxes, also has to be done before year end. Can't do this retroactively. Knock that out by December 31st. And finally, the last one, and possibly the most important one, is finding a good CPA and getting a tax plan. If you want to sit down with a CPA and get their opinion on your entire entity structure, your different vehicles, assets, buildings, 401ks, IRAs, all sorts of different things, and figure out the best way to structure everything to lower taxes, do that in the off season. Don't wait until tax season. Trying to get time from your CPA to do strategic planning during tax season is like trying to ask the pretty girl in high school to prom a week before the dance. Somebody else already got there first, okay? This is the time of year when CPAs, our phones are ringing like crazy, our emails are going crazy, our office is filled with customers and clients. You're not gonna get their attention then. And if you're trying to find a new CPA and vet them, also the worst time to do that. Fun fact, a lot of CPAs actually also raise their fees closer it gets the tax deadline, just from a demand perspective, right? If they have a ton of people that are trying to get their taxes done before the deadline and you come in, they're obviously just gonna end up giving you a quote that's much higher than if you had contacted them 2-3 months prior when they were slower. They would have given you a more usually market value quote. If you try to get in 15 days before the deadline, you're gonna get the worst prices and the worst service. It's just an unfortunate truth of the industry. When people are swamped, they're gonna charge for it. So I always encourage people to meet with your CPA well in advance of tax season so you can, 1, apply these strategies on time, 2, get a great quote, and 3, just get your CPA's full attention. If you want to sit down with me to talk about your tax situation and do some tax planning, there's a link in the description to book a call with me directly. Feel free to do that, and make sure you just get all this stuff done before the tax year is over so you don't leave a bunch of money on the table. Okay, it's a very simple mistakes you can make here to just miss out on thousands and thousands of dollars. Don't do it. So that was the end of this video. If you liked it, please give it a thumbs up, subscribe, leave a comment. It helps me grow the channel. If you need help with your taxes, you can book a call with me directly at the link below in the description, and you can also sign up for our email list. We only send out an email about once a month, and that's everything I need to tell you. So I will see you guys in the next video. I'm out. Peace. Have a good day. Appreciate the views.